What is up, fam? It's been a while. I know. It's been some time and I've been slacking. But I'm gonna do something for you. I'm gonna go ahead and give back for being so patient, for understanding and being able to comprehend the reason why I've been out. I don't really know why I've been out. I've just been slacking. So with that said, I'm gonna go ahead and give you guys a free breakdown. I'm gonna provide you guys with some fire content, which is going to be time frame correlation. Time frame correlation is something really important. Time frame correlation is going to give you access to having a higher risk reward ratio. How is this? Because you'll be able to enter off of the minute time frame and be able to exit off the 4-hour and daily time frame. You'll be able to do a swing scalp, which I would consider, because you're scalping it as your entry, but you're swinging it as your profit or as your target, I would say. So with that said, I'll be posting moving forward 3 times a week in this channel, Melody Stacks. It's gonna be more like a vlog documentation series moving forward, so that way you guys can see how does I go by, what is it I'm doing my day-to-day basis. You guys will be able to see where I'm traveling, why I'm traveling, things I'm doing with my family, loved ones, and friends, alongside with how it is that I'm managing my account, and also how it is that I'm going about with my SNG family, SNG team. If you guys want to be part of that Signal program and education program, link will be down below, which is the AI Stacks bot. You guys will see it down below. Everything that is on my descriptions in the YouTube channel, make sure that it is on this YouTube channel, because there's a lot of fake accounts and unfortunately there are people getting scammed. So with that said, guys, enjoy the video, enjoy the time frame correlations. I'll see you guys on the next time. Enjoy the video, enjoy the time frame correlations, and I'll see you guys on the other side. Alright guys, we're going to be going over time frame correlation on this specific lesson. So time frame correlation is something very important that we definitely want to be taking in consideration when it comes to scaling in to a lower time frame entry and scaling out as we go into our higher time frame targets. So one of my things that I get asked a lot is, okay, how are you able to have a small stop loss yet have a big TP when it comes to a nice risk reward ratio? The ways that you do this is by being able to understand your time frame correlation. Now, as we understand before that, we need to know what are points of interest, areas of imbalance and sufficiency, areas of liquidity, and also we need to know what is a complex pullback as well. So some of these things that you guys will be seeing within the following sessions and lessons as we continue dropping down these folders. So I'm gonna go ahead and write it down first, and then we'll go ahead and give some examples. So first things first is we want to know what's going on from the bigger time frame perspective. For example, the monthly time frame, we're gonna go to the monthly, and on the monthly time frame, what we'd be looking for would be direction, right? So monthly would be looking for direction, and from there, once we find our direction on the monthly time frame, we will be able to go down to the weekly time frame and look for points of interest. Now within those points of interest, what we would like to pay attention to is to see a daily time frame, which is going to be for a potential break of structure. So daily time frame, we're looking for a break of structure, and down into our 4-hour time frame, we'd be looking for a counter trend distribution or accumulation, depending on what scenario you're looking. So that's gonna be the first time frame correlation from the monthly to the weekly to the daily to the 4-hour entry. And then if you want to go ahead and drop this down more, what we can do, we can go from the weekly time frame for a overall direction down into a daily point of interest, down into a 4-hour break of structure, which would take us down into a 1-hour/30-minute counter trend trade, which in this case, the counter trend trade is our distribution or accumulation, depending on what area in the market we are at. You want to know how it is that you can break things down to smaller time frame. So the overall direction is going to be able to allow you to come down into these time frames to be able to have the overall direction target, but at the same time have a 4-hour lower time frame entry. Okay, and as we go over to daily direction, which will go down into the 4-hour point of interest, which in there we would be going down into the 1-minute/30-minute break of structure. Ideally, I like to see the 1-hour break of structure and down into 15-minute counter trend, which we're looking for distribution or accumulation. And it just keeps on going lower and lower and lower, as you can see. The one that is my overall favorite is of daily direction, 1 hour. But of course, we can go ahead and go lower to 1 hour direction, which this would be for more like scalpers and intraday traders. The one over here would be into like a scalp swing trade, and scalp intraday trade. I'd like to go into the scalp swing trades, which is you're looking for less opportunities, but at the same time, good risk to ratio. Not too many opportunities, but just right. The 1 hour direction would go down into 15-minute point of interest, which would go down into our 5-minute break, which from there we can go down into 3-minute, 1-minute counter trend trade, which our counter trend trade equals down into a distribution / accumulation depending on what area in the market you are at. So these are the main time frame correlations that you'd like to be paying attention to, especially when it is that you're trading this type of strategy that we're doing when it comes to finding areas of accumulation, finding areas of distribution. So if there is something that I would recommend to do is to find which one is best suited for you, right? If you want to be taking a lot of trades, then definitely be looking to this one. This would be like giving you like at least 1 trade per day. If you want to be looking for like 2 to 3 high probability trades, I'd like to go into daily directions of the 4 hour. And then if you want to go ahead and go to less and less trades, you continue on going higher. So these are things that you definitely want to be taking in consideration a lot. I personally like this right here, the daily, the 4 hour, the 1 hour, and then the 15-minute counter trend trade. And then obviously if you are right here in the 15-minute counter trend trade, you can even go down lower to a 5-minute as well. So this one's my favorite so far. This is the one that I like because it gives you 2 to 3 trades per week. You're able to go ahead and take a trade and be okay with it. It gives you a pretty good stop loss. You know, you're going to be looking for stop losses on this one for, you know, it can be anywhere between 15, 20, 25 pips and ranges for 60, 80, 90 pips, right? So this is a good risk to reward ratio that which you can take in consideration. If you want to maximize your risk to reward ratio, you can definitely go into this right here. However, you can combine all this in one. Okay, you can combine all this in one, which you go into here and then break it down lower and lower and lower and lower, and that's going to be the one that's going to give you those nice risk to reward ratios. So right now my record is a 1 to 141 risk to reward ratio, but that is because I combined all these together. Now, it's not easy and it doesn't happen all the time. However, when it does happen, you'll be able to note it and take full advantage. As you keep on going out of it, you'll be able to scale out and scale in on the retracements. So now that we went ahead and did that, I want to go ahead and show you guys this real quick. Let's go over to the daily direction, right? So over here on the daily direction, what it is that we're seeing, we're overall seeing at the overall structure how we can see how market was creating right here. We're creating lower lows, lower highs, lower lows, broke these areas and then came back over here. We failed to break. We actually did break a little bit lower. So since we did break, okay, that's another thing that we like to take in consideration is the close of the candle. We can see how the close of the candle did break. So I can expect market to potentially come back lower into creating a lower low. Now there are areas that we want to definitely be paying attention to, which is going to be the imbalance zones, which these are going to be things that we'll be looking into other lessons. But for right now, I just want to go into the correlations of the time frames. So now that we got the daily direction that's bearish, we want to find is those points of interest, right? And of course, those points of interest, you also want to kind of find them on top of previous points of interest of our daily direction. So I'd be expecting for market to come up into either this area right here or even this area right here, because these are the points of interest from the daily time frame and that is our direction. Once we find that, then we want to go into the 4 hour, right? We want to go into the 4 hour and find those points of interest, so that way we can go ahead and maximize. So on the 4 hour time frame, we can find right here that there is a nice little imbalance zone. Now with that imbalance zone on top of that, there is to add confirmations equal highs. So we're able to come up into that area of imbalance, which is also our point of interest. So we went from daily to the 4 hour. Now that we went to the 4 hour, our next goal over here is to go into the 1 hour, right? And on the 1 hour, we want to be finding that break of structure. Now, what is that we're able to find over here? We're seeing how market is able to continue creating its overall structure. We can see how market's going higher highs, higher lows, higher highs, higher lows, higher highs, and then right here we can see how we see a lower low, lower high. We broke this area,
created a low right here, created a high over here, created a low right here, created a high. We broke this low, okay, so we were able to break the low. Now we're looking for market to come back up into areas for us to take in consideration for the M15 counter trend trade. So let me go ahead and just clear this up a little bit. As we can see, areas that we're paying attention to, lows breaking. The low had broken, and there is areas for us to be paying attention to, such as the area of imbalance and also where the market had previously broken, because in areas that market breaks, market will tend to come back and do a redistribution or reaccumulation. Since this is our previous candle that we were able to buy into, market bought into right here, sold off, market wants to come back and create an area of discount. So coming down over here into the M15 counter trend trade, we want to go into the M15. Okay, so going on to M15, we can see how market is creating higher highs, higher lows, higher highs, higher lows, and then higher high. Right here, failed to create a higher low, comes back up and breaks our previous structure level. So now we had created our distribution. All we have to look for is for a test of that distribution, areas of inefficiency, areas of imbalance. So we can clearly see how market had created a very nice area of imbalance into this zone right here, and also understanding that our previous level that we had bought into before a sell-off was in this area, which market came clearly into the half point for a potential entry into the zone. That zone gave us a nice short opportunity with stops right above the highs. And then what is it that I would be taking consideration for my overall TPs? TPs, you can go into the 1 hour, look into the structure levels, the overall structure levels. You can go into the 4 hour, look at the overall structure levels. So in this case scenario, overall structure levels would be down over here, but also taking in consideration that market is leaving behind areas of inefficiency in which market will try to come back, do a accumulation, and continue going up before going down. So as you may see, this was a good run to the downside. Let's say 50% of efficiency, a good nice 1:3 risk to ratio, almost a 1:4 risk to ratio. And that was broken down all the way from the daily time frame. Now, of course, you want to go ahead and take it down further. You definitely can take it down further into daily areas, which would lead us into 115. However, those are things that you will be managing as you continue moving forward. You'll be able to go ahead and pay attention to the overall structure and what to be paying attention to. Based off of the daily time frame, this is very possible for market to keep coming down all the way into the zone. However, you need to understand that the same way you look at time frame correlation from a daily perspective, 4 hour, 1 hour, 15, and so on for your entries, you also want to be paying attention to that exact correlation for your exits, meaning that you want to be able to pay attention that everything is correlating. You want to be able to make sure that structure is still correlating, the 1 hour is correlating with the 4 hour, so on, in order to maintain that trade. So with that said, guys, I hope this quick lesson was of much value for you, and that way you can go ahead and utilize this to your advantage as far as the time frame correlation. I'll see you guys in the next lesson. Have a great one. Bye-bye.